Hi, Elaine.
Hello?
I happen to be in the neighborhood, so I thought I'd stop in and thank you for your lovely gift.
Oh, you're welcome.
Is anything wrong?
Well, Sue Ellen, it's not a top. It's a bra.
Oh, I know. Thanks again.
Oh my God, Kramer, is that woman just wearing a bra?
Then we saw this woman and she was wearing a bra with no top.
No top. She didn't have a top on?
Yeah. So I got distracted and I crashed the car.
Mark Zuckerberg providing Seinfeld-level comedic relief for Trump's inauguration day. How absolutely embarrassing when he wasn't able to keep his eyes under control. It kind of reminded me of something Trump had said a couple weeks back, that he was a weirdo. Now, I'm not saying that. I'm just saying that it kind of fit the day. It was a star-studded event. We had the CEO of Google. We had Tim Cook from Apple. We had Mark Zuckerberg from Meta, Rolly Eyes Mark. We had Elon from Tesla and Bezos and his wife from Amazon. It was quite interesting to see all of these billionaires, these essential oligarchs at this world event, ushering in a new era of a new president. Donald Trump has positioned himself as pro-business, low taxes, and low regulation, and he has right out of the gates begun to strip away some regulation. Now, the markets are climbing, and I just wanted to cover this, not to be political, but just to mention that the price of stocks is more expensive as Donald Trump takes office than for any other president in recent history. More expensive than Reagan, Bush, Clinton, Obama, or Biden. So can Donald Trump's pro-business agenda, with all of these billionaires gathered around, push this economy higher? I don't want to get political, but let me know in the comments what you think is going to happen in the next 4 years. Is this market climbing? Is the bull run back in force? Well, I'll tell you one thing, the markets are climbing. Tonight, Netflix reported earnings. It was a beat on revenue and a beat on the earnings per share, and the stock absolutely soared. And it's the first big tech company that may be signaling that Wall Street is interested in putting money back to work in these expensive markets. This is the Stocks with Josh show. I'm going to cover a couple important big tech companies. I want to remind you that I really don't get political. I'm just sharing some highlights that humored me over the last couple days. I'm going to talk a little bit about Meta today, Apple, and Tesla, because all of them have been moving big. Tesla came crashing down today based on a couple executive orders that Donald Trump made. And as I told you in my last couple videos, it's going to be Wall Street versus Washington. And right away, Donald Trump said that he was going to try to rebuild the auto industry by getting rid of the EV mandate. And so you can see that he can absolutely cause stocks to soar or crash. And in this case, it was his good buddy Elon's stock that came crashing down. I was a little surprised that with Mark Zuckerberg's antics and the TikTok news over the weekend, that we didn't see a pull down on Meta stock. It seemed quite resilient because personally, Meta was probably one of the companies that would benefit the most from TikTok being banned. In a turn of events, Donald Trump stepped in and reassured TikTok that they could keep going because he was going to try to work out a deal for a U.S. buyer to come in and own 50% of the company. People have speculated that perhaps Elon would step up to the plate. It seems like he's got more than enough to try to be handling. Recently, you saw that his rocket exploded, which is somewhat normal for SpaceX. Not everything is going to work out perfectly, but he's got a plenty on his hands. But there's speculation that he could perhaps be the 50% partner in TikTok in the days ahead. But either way, TikTok is back and running, and it didn't slow down Meta's price. Meta's price continued to climb. All right, guys, I'm going to cover a couple important stocks. Thank you for hitting the like. I want to shout out a couple plays that I did in the Stocks with Josh Discord this morning. One of them was Tesla puts to the downside. This was another 100% winner. Tesla absolutely fell apart on the Trump news. The call was to enter puts It got all the way down to 406. So you could have actually ridden that down for more than 100% easily, 200% plus on that play. I also gave a trade setup for Apple stock, which also has been under incredible selling pressure. Now they are going down because they're losing market share in China. They've got steep competition over there. Now I called this puts below 224.50 down to 221.90, and it hit 219 and it's bounced a little bit. But I'm going to take you guys into the Apple chart and I'm going to tell you kind of what's going on and what's happening over there. And we're going to see what it might lead to here as we've got earnings up ahead. I believe January 30th, earnings are right around the corner, and Apple stock's been punished quite a bit and it is beginning to look attractive, but I'm not going to touch it till it gets to a specific price point, and I'll show that to you guys right now. All right, if you guys recall, it was really less than 10 days ago that I said that if the price of 241.80 got broke, this was going to fall apart and eventually come down to $220. Well, that has fully come to pass today. Now, I want to highlight a couple important prices for you. 229.30 is the area where there is resistance above for Apple right now. Now, before you load up on puts, if you didn't take puts from 241 down to 220, I would say you want to slow down, because we can, after we've touched the bottom of this bullish descending channel, we can begin to move sideways and back up as we get closer to earnings, okay? In addition to that, we could get to the top of this channel right around 230, and we could break out and go back on a bull run. Netflix has given all of big tech a little bit of positive spin today that the market will buy and reward companies that are improving their earnings per share and revenue. Now, the ultimate target for Apple would be this move down to 216, which is historic support. And beneath that, it's going to be the price range of 200. So this has become very attractive. Now, I want to point something out to you about the percentage moves that Apple gets over the course of time. The last time we had a major drawdown, Apple went down right around 17.5%, right? That was the total move. Well, I just want to point out that if Apple right now gets all the way down to this 216, it actually gets us to a very similar percentage move down. 216 will once again be around a 17.5% move from the recent high. And this is an area where I think that people will begin to look at Apple again for a long-term move. Now, I think that even though it does make sense that there's been Apple selling because they really haven't innovated, they're losing market share, specifically in the global market space. And you've got Nancy Pelosi with her crystal ball selling shares right now. You've got Warren Buffett, who's pretty much unloaded his entire bag. Now, many months back, I had predicted something like this at the end of 2024, but it happened a little bit later here in 2025. We've come up off of that $260 high. And what's going on with Apple? Well, I don't have a clue, but part of me wondered, especially when I saw or heard that Nancy Pelosi was selling her shares. It means that there is a news event here that is yet to be revealed to the rest of us, because we know that Nancy Pelosi does have a crystal ball, which does allow her to see the future. And if she sold her shares, it's because she's concerned about a news event around the corner. What could that news event possibly be? I don't have a clue, but the thought did cross my mind that Tim Cook could be retiring. He's had a number of initiatives. There's been talk of him retiring. He doesn't have to keep doing this forever and ever and ever, and he could hand the company off while it's still in its peak performance. And you might say that, well, it's come back a little bit, or something didn't go like, they let the Apple car go, and there's all sorts of technologies that they've been a little bit sleepy on, or their innovation hasn't been the best. But here's the bottom line. If he retired, the fact is he could say that he has led this company successfully for a long time, reaching absolute market highs, and it would be going out on top at this point. And so I'm wondering if that is the news event that we're going to get in 2025. But let me just share with you, it's absolute pure speculation. But once I heard that Nancy was selling her shares, I knew it has to be something that the rest of us don't know. But I would love to pick up Apple or take a risk on Apple between 216 and 200. But I'm going to tell you guys that I am a cautious and patient investor, which means that I'm going to nibble to start, and only when I see that everybody else wants to get back in on Apple, I'll wait a little bit longer to get in when I see that Wall Street wants to get back in. But right now, it seems as if Wall Street wants to get out of this stock. And yet there's going to be so much opportunity down the road in the latter half of 2025 when artificial intelligence really begins to become part of the Apple user's experience. Right now, I think we're still at the early stages, and you guys know that I don't think that Tim Cook spent enough money in the right place at the right time, but I do think that they could catch up, and I do think that down the road, this is going to be a good investment, but I do believe that there is another leg to drop, and we'll re-examine the charts at that time. We'll be looking for bullish divergence, but at the moment, I'm still calling Apple a hold, not a buy just yet. Okay, we're going to talk a little bit about Tesla. Tesla obviously got totally and completely crushed by Donald Trump's executive orders on day one. But the fact is that most of the large investment firms have a higher price target for Tesla now, and they believe that Elon and Tesla are going to benefit from this alliance with Donald Trump. But personally, I am still cautious about Tesla. Ever since we came off of our highs, I've been saying that I would be a buyer at 353. Now, when we began consolidation going right around 400, I thought maybe if we stay up here long enough. But personally, I still am a little bearish on these markets, but we have to see what happens through earnings. The only thing today that causes me to be a bit more optimistic is Netflix. The response that the markets had to Netflix absolutely going crazy over their earnings, skyrocketing. Let's go look at that chart together. So as you can see, after hours on the 1 hour chart, this thing is absolutely taken off. I had these levels marked. It briefly paused at 935. It then stopped at 969, but quickly worked its way through. Now, personally, 969 is a pretty intense resistance for Netflix right now. But ultimately, if this thing wants to continue to move after hours and in the market tomorrow, 1040 is the price point of resistance that I see ahead for Netflix. That's where I think it absolutely will hit a wall. And, you know, I'm not into trying to guess the top. This is a technical reference for me, this 1040. But if I do begin to see a huge selling wick at 1040, I will attempt to ride that down, because I think that this has moved up very, very quickly. It's a very optimistic response to earnings. And what we've got to take into consideration is this. We have to continue to watch Netflix. So Netflix has gone through the roof after hours, right? And so that doesn't take a lot of volume to do after hours. We have to see the day after earnings whether these gains can be sustained, because one, we're watching Wall Street's reaction to earnings, both at the earnings, but also the following day, to see whether or not it turns into a sell the rip environment. So we need to see if Netflix can hold these earnings. And if they can hold these earnings, then that to me is very positive for the big tech earnings ahead of us, that the market may be wanting to reward companies that are continuing to perform well in 2025. So that's where we're going to leave it today. Thank you guys for joining me. Thank you for dropping a heart, saying hi in the comments section. These both trade setups provided in the Stocks with Josh Discord. All you had to do with those was to simply enter on the cross of the price, and they yielded hundreds of percentage points of profit for whatever position size you may have taken. And if you went with the higher risk, out of the money positions, you could have done much, much better. The trade setups work. You just got to consider taking the trade. But come check it out. That's the Stocks with Josh Discord trading community. It was a great day trading. I appreciate you guys joining me. We're going to do it again tomorrow. Live trading tomorrow with me Wednesday morning at market open. I'll see you there. Take care. Bye-bye.